Hello everyone and welcome back to the Velocity channel, where this is your bridge to financial freedom. Today we're going to go ahead and get rid of a huge loan, over $100,000. We want to make sure that you are out of this loan as quick as possible, using as little as possible. But before we get into that, please like, share, and subscribe so that everyone around the world can know the power of Velocity banking. Now, what I want to submit to you is this, that it's not really your debt that is getting you down. It's how you're paying it. So it's your system of paying off debt that is leaving you behind. And what we want to show you today is perhaps another system that you can use to get rid of the debts without getting a second job, without taking those expenses and saying, well, we can't eat out today. We got to eat the red beans and rice diet and all of that. We want to share with you perhaps another financial allocation method that you could use for you and your family, okay? So first of all, we've got to write it out, okay? Loan, $102,000. Now, this particular loan is going to be at an interest rate of at least 10%. Now, do you know what that means? That means that this interest rate is going to have some persuasion on what that minimum monthly payment will be. Because remember, interest feeds off of what? The principal. There is a calculation you could use to make sure you know what your minimum payment should be, okay? In this case, it's $895 each and every month. And a lot of you are paying more than that. A lot of you are paying maybe less than that. That's because of the different lenders. But I want to let you in on a secret that perhaps you didn't know. And that is, this number right here is not going to this number right here. Oh yes, you got to realize that this is getting split up, isn't it? Is that a little better? Absolutely. So we want to go ahead and make sure you know how this is getting split up. Now, another factor that comes into play is how long you're going to be in the loan, okay? With $895, 10% on the $102,000, you know you're going to be in it for a long time, all right? The lenders don't just make money off of interest. They make money off of time and balance. And we want to use those two elements to our advantage. Does that make sense? Okay, so this particular loan is going to be for 30 years. Now, it doesn't matter if this is a mortgage, if this is a car, if this is a student loan. This is how you pay all loans. We've got to get out of the mindset of looking to the interest rate. We got to get out of the mindset of just paying, just looking at the minimum monthly payment, and go beyond what the banks are telling us we should do. Because guess what? That would be like chickens listening to a fox on how they should eat, okay? Now, $895 is getting split up, but how is it getting split up? Well, the first month, we have $850 of your hard-earned $895 a month going towards where? Interest. All right? And then we have $45. Okay? $45 going towards the principal. Is that okay with you? 12 months later, all right, or 11 months later, I should say, we have it going down a little bit, okay? $845 goes towards the interest. $50 goes towards the principal, all right? Now, 24 months later, is it going to get any better? Well, it does get better, but not by much. Folks, please learn to do these calculations on your own, right? Simply because I want you knowing what the banks know. 36 months. Now we're 3 years in. Look at how much you've paid down on the principal and the interest, okay? Look how much you've given away. 36 months, $834 and then $61 towards the principal. Now, I want to stop right there, and I want to grab your attention and place it toward how much you're giving to the bank. No wonder they push you to refinance. They want to start this clock back over again. All right? That's what they want to do. Hey, we can put you in a lower interest payment. You know why? Because they want these numbers once again. Now, even though these numbers are going down, look at how much they're going down by. They're going down by $5 on average each year. Not month, each year. And so the good side is, on the principal, it's going up, how much you're paying to the principal. But look where you are on the third year paying towards the principal. If you're okay with this, then I'm okay with it. But I don't think you're all right with knowing that your hard-earned money goes towards someone that you can't even see. Our goal in this video is to give you this $895 cash flow as quick as possible. I want it in your hands. So let's do this instead. Let's take this number, which you may have lying around the house, right? Or in your bank account, perhaps you don't even know. Those of you who are already on the Money Max account, you didn't have this before until the Money Max account said, hey, wait a minute. Yes, you do. You can save this much on this day. You can save that much on that day. That way, hey, you've got the $500. Some of you even found more than $500, $600, $700. I'm going to show you how to get rid of that payment. And with the Money Max account, it'll already show you that you do have this amount here. But if you don't have the Money Max account, you can still look at this number and say, well, there's got to be something that I'm spending that I can allocate this towards this amount so that I can have this amount each and every month. And we're going to get into that right now. So we're going to place this $500 towards the principal. Do you remember when I shared with you that the banks take advantage of time and balance? Do you remember that? Well, now you are too. And this is what I mean. Okay, so $500, we're taking care of that balance. And we're doing that each and every month. So as the time, right, goes by, that $500 has already been deployed towards that $102, which means on the first month, let's make sure you can see this. On the first month, we have $850, yes, going towards the interest, going towards the bank, all right? However, on the principal side, we have $545. Now, that's a stark difference between $45 and $545, right? It's a difference of $500. Now, look at what happens when you have the 12th month, okay? The 12th month is right here. Look at what happens to the interest. Look at what happens to the bank's money, to how much the bank gets. Oh, it's $50 less instead of $5 less, okay? Where does that $50 go? Well, it goes to the principal side. And that means it goes towards you, okay? Paying off that debt. Because remember, the smaller the principal, the smaller the interest. Absolutely. That's how it goes, because the interest feeds off of the principal, okay? 24th month, here we go. $735. That's how much you're paying the bank. $660 towards principal on the 36th month. Let's look at where you are right now. $667 and $728 goes towards the principal. Now, you tell me where you would rather be in 3 years. Would you rather be paying the bank $834, or would you rather be paying the bank $667? Would you rather be paying your principal $728 on the Velocity banking side, or $61 on the traditional banking side? Now, if I could, for just a minute, I want to share with you again that it's not the way you've been paying that is keeping you in debt. It's your mindset, the system that you're using. You have the money to get rid of your loans so quickly, but they never taught you a system in which you could use the money for your advantage. They always taught you a system that they could use to your advantage and take advantage of you, right? And so what I'm sharing with you is something that is not a mystery at all, okay? It's just something that perhaps you have not been aware of before. Now, if you were to continue on the traditional banking route, do you know what your interest would be? So not only would you be 30 years into this loan, yes, you paid it off after 30 years, but you've also paid $220,000, $244, and that's just in interest. $220,244 in interest. While on the Velocity banking side, you just paid $55,979 in interest. And oh, by the way, you're actually out in about 9.5 months. Does that make sense? Makes sense to me. This is what doesn't make sense. And I'll go ahead and get out of the way so you can go ahead and screenshot that. Make sure that you are using the money to your advantage, because the banks are using ignorance to their advantage. I don't want you ignorant anymore about how to pay off these gargantuan loans. There's no reason in the world that you should be in this loan. It doesn't matter if you're a mortgage, if it's a car loan, if it's a student loan. There's no reason that you should be in it for 30 years. There's even no reason you should be in it for 20 years. Listen, there's a reason why these banks have gone to 40-year mortgages. They want to take advantage of your ignorance. Don't let them anymore. We've got the answer. You've got the $500. So instead of spending it on maybe consumer stuff, let's think like lenders and use this $895 as soon as possible. Listen, folks, if you have any questions, don't hesitate. Barry, we didn't forget about you. We're actually going to make sure that you have the calculation that you need today in order to get rid of that debt, all right? I will see you all in another video. God bless you and have a good one.